Rule number one, never lose money. Rule number two, don't forget rule number one. Hello everyone, welcome to the channel Invest for Tomorrow. I'm your host Ganesh, and here we discuss about personal finance, investing, stocks, and much more. These are the magic words from Warren Buffett himself. By the end of this video, you will learn the 4 most important investment tips regardless of what level you are at. If you are a beginner, stick around till the end of this video as these tips will build the best practices to help you in your investment journey. So without further ado, let's dive into the tips. Tip number 1, invest in a business that you understand. Let's see what Warren Buffett had to say about this.
Old-fashioned belief that I can only should expect to make money in things that I understand. And when I say understand, I don't mean understand, what the product does or anything like that. I mean understand what the economics of the business are likely to look like 10 years from now or 20 years from now. I know in general what the economics of, say, Wrigley chewing gum will look like 10 years from now. The internet isn't going to change the way people chew gum. It isn't going to change which gum they chew. If you own the chewing gum market in a big way, and you've got Double Mint and Spearmint and Juicy Fruit, those brands will be there 10 years from now. So I can't pinpoint exactly what the numbers are going to look like on Wrigley, but I'm not going to be way off if I try to look forward on something like that. Evaluating that company is within what I call my circle of competence. I understand what they do, I understand the economics of it, I understand the competitive aspects of the business.
Welcome back. I hope you enjoyed that clip. So as a beginner, when you're just starting out, try to find a business that you love. Then go to their website, look at their products and services. So for example, you love Starbucks. Go to their website, see what they're offering, what are the different products, what are the different services. And then I want you to do something very interesting. I want you to imagine that you are in a time machine and you can transport yourself 10 years in future. Then imagine if that stock or the business which you love is still there and still serving the same coffee, the great coffee they serve today. Now this exercise is very important because you want to see if the company you love today is going to be there 10 years down the line, because end of the day, we want to know how we want to invest for a long term. If after that exercise, your answer is yes, you can invest. As Peter Lynch once said, don't invest in a stock that you cannot draw with a crayon. So the takeaway from this lesson is take that crayon and draw that idea out and then invest. Tip number 2, when you buy a stock, you plan to hold it forever. Let's see what Warren Buffett has to say about it.
What criteria do you use to sell stock? I kind of understand how you buy it, but I'm not sure how you sell.
Yeah. Well, the best thing to do is buy a stock that you don't ever want to sell. I mean, that's what we're trying to do. And that's true when we buy an entire business. I mean, we've bought all of Geico, or we bought all of See's Candy, or the Buffalo News. We're not buying those to resell. I mean, what we're trying to do is buy a business that we will be happy with if we own it the rest of our lives, and we expect to with those.
Welcome back. So you heard it from the Oracle of Omaha directly. Let's try to break this down a little bit more. Buy and hold mentality is the most important lesson that you will learn in your investment journey. Any long-term investment always outperforms the market. So for example, if in January 2019 you would have invested $1,000 in Apple, today you would be holding $3,184. That's a 318% increase, and now that has outperformed S&P 500, Dow Jones Industrial, or NASDAQ. When you're starting to learn a new skill, how do you get better at it? You stick with it for a long time and then you start getting results. This is also true for investments. You buy a stock and you hold it for a long term. And then there are many advantages of doing that. You take the emotion out of the investment. That means that when the market is up or down, you're not worried about the daily stock price. If you're a long-term holder, you will pay less taxes on capital gains. If it's a dividend-paying stock, holding it long-term is always beneficial because of the growth in the company as well as the compounded effect of the dividends you will get. Stock market is designed to transfer the money from the active to the patient. This is what Warren Buffett was trying to tell us. So the takeaway from this tip is you invest and you forget. If you guys are getting value out of this video, please hit that like button. And let's go to tip number 3. Diversification can be dangerous. Let's hear what Warren Buffett has to say.
We think diversification is, as practiced generally, makes very little sense for anyone that knows what they're doing. Diversification is a protection against ignorance. I mean, if you want to make sure that nothing bad happens to you relative to the market, you own everything. There's nothing wrong with that. I mean, that is a perfectly sound approach for somebody who does not feel they know how to analyze businesses. If you know how to analyze businesses and value businesses, it's crazy to own 50 stocks or 40 stocks or 30 stocks probably, because there aren't that many wonderful businesses that are understandable to a single human being in all likelihood. And to have some super wonderful business and then put money in number 30 or 35 on your list of attractiveness and forego putting more money into number 1 just strikes Charlie and me as madness. And it's conventional practice, and it may, if all you have to achieve is average, it may preserve your job, but it's a confession in our view that you don't really understand the businesses that you own.
Diversification is defined as the act of making something more diverse or varied. Even Berkshire Hathaway has a lot of stocks in their portfolio. And now you're even more confused that on one hand, you are asking me diversification is dangerous, whereas on the other hand, even the person who gave the tip has a lot of stocks in their portfolio. Warren Buffett has a lot of experience in the stock market. So he invests with a lot of conviction in his mind about the companies that offer a lot of value at a very reasonable price. As a beginner, when we are just starting out our journey, we often see the new investors making this huge mistake by over-diversifying their portfolio to cover the risks. Excess diversification is dangerous, which means that you are diversifying your investment amount into many stocks. If you're just starting out and you do not have enough experience and you're still buying a lot of stocks, the chances are that you're playing a dart game and you're expecting huge returns. Just starting out and you're unsure about where to invest and how to pick stocks, a good place to start would be to invest in ETFs, which are called exchange traded funds like VOO, IVV, etc. They track the entire market, for example, S&P 500. So the takeaway from this lesson is, before you buy your next stock, keep this lesson in mind that diversification is dangerous, which means that you do not want to over-diversify your portfolio by limiting your gains. So the last tip in this video, which I'm going to share with you, is price is what you pay, value is what you get. Let's hear from Warren Buffett.
Most of the professional investors focus on what the stock is likely to do in the next year or two, and they have all kinds of arcane methods of approaching that, but they do not really think of themselves as owning a piece of a business. The real test of whether you're investing from a value standpoint or not is whether you care whether the stock market is open tomorrow. If you're making a good investment in a security, it shouldn't bother you if they close down the stock market for 5 years. All the ticker tells me is the price. Yeah. And I can look at the price occasionally to see whether the price is outlandishly cheap or outlandishly high. But prices don't tell me anything about a business. Business figures themselves tell me something about a business, but the price of a stock doesn't tell me anything about a business. I would rather value a stock or a business first and not even know the price, so that I'm not influenced by the price in establishing my valuation, and then look at the price later to see whether it's way out of line with what my value is.
Welcome back. We often get obsessed with the stock price. Every day the stock is going up or going down, and we always obsess about the daily price. What we forget in this hustle bustle that the stock price inherently is more volatile than the value of the company, at least in most cases. Many bargains were available during the financial crisis of 2008 and 2009, and even the most recent sell-off back in March 2020. Most of the investors were quick to sell off these companies, and the stocks were available at a very reasonable price. For example, Boeing was trading at $325 in December 2019. However, in March 2020, the stock fell down to almost $95. It felt like that all the investors believed that from now onwards, we will not be flying anymore for the rest of our lives, and the stock and the Boeing would go out of business. However, that is very untrue, because today the price of Boeing is $225. So what this example tells us that temporarily the stock price was separated from its underlying business value of Boeing. Stock prices will always swing and will impact the investor emotions, but that does not change the company's underlying business value. So the takeaway from this lesson is concentrate on the high quality companies which are available at a reasonable price. That's it for this video. I hope you learned something new and you will look at investing from a different lens. Don't forget to hit that like button. And if you like the video, consider subscribing. It helps the channel and motivates me to bring more value content to you all next time. But don't forget to invest for tomorrow.